Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, April 30th, 2009. Well, a wild day on Wall Street, folks. We've seen a massive rollover in the indexes as all of the indexes gapped higher today on strength across the board from earnings like Procter & Gamble. All of that stuff contributing, plus a constant pressure on the upside of this market that we've seen lately. However, and I say however, it could not sustain itself, folks. It has been long overdue. Good rollover intraday. Now, again, it still has a long ways to go until the close. It's only a little after 1 p.m. Eastern Time, but nonetheless, a beautiful rollover today. Those in the chat room capitalized with me on some short positions, initiating some good shorts at the top there. Why did we initiate them? Because there was a key level hit on the intraday stock chart on the S&P 500. There was a major level mentioned in the S&P daily market report yesterday by my partner, chief market strategist Nick Santiago. So that's all you need to know. You know these levels. These are all technical levels. You can initiate positions and put positions in play where you're going to come out with a beautiful, beautiful short. That's what we've done. We're holding those shorts right now, maybe taking some profits off the table. We'll have to see how the market reacts. Right now, we have a bearish flag pattern intact on this market, and I just want to cover all the bases. Now, number one, let's talk a little bit about what's going on here. First of all, Chrysler filing for Chapter 11. The beautiful fall started a little bit before that after we continued to hammer. Now, look at this trend line. I'm going to show you where I got this blue trend line from, folks. If you take the high pivot point right here, connect it to the high pivot right here, it continues to go right up. Connects to the secondary high pivot on yesterday's market. Where does it go? Continues. Look at how the market cannot get above that level. This is a hardcore level right around the $89 level on the spiders, SPY. We're looking at the intraday 10-minute right now, and you can see how the market continues to hammer on it every time it pulls back. Hammers again, a little bit of a topping tail perhaps, and then all is said and done. Good rollover, 2-bar surge to the downside, pause bar, 2-bar surge to the downside, 2 pause bars, and a double 2-bar surge to the downside. So you've had 3 of these surges to the downside. Where does it lead us? To gap fill. Now again, this is the key thing, folks. Watch where this market goes. You have an in-spirit of bearish pattern formation right here, inside bars, inside of the red candle. That's what we're looking for right now. We want to see if that continues to form. Does it continue to kind of form and roll over later today, or do we bounce up and maybe take out this total bar, making it possibly a bullish pattern formation? We'll see. Remember, this market's been a very interesting market lately. There's always been shady buy programs coming in, whether it's led by Goldman Sachs, led by ExxonMobil, who knows. ExxonMobil today getting smoked down on earnings. They had one of their biggest drops in earnings in a long, long time. Look at this chart on ExxonMobil. Getting crushed down $1.85 on earnings. Finally getting a little bit of a bounce. But notice the resistance right here. Here's necktie resistance. 20 moving average going right into the 200 moving average on ExxonMobil. That will be resistance, and it may pull back off of that. All right, let's go back to the spider chart on an intraday basis. So again, this level is something we were watching. There's actually another level that goes back all the way to early April that coincides with this push right through as well, where it crosses right up here. So there was actually a double confirmation we had on the intraday charts. Some of my traders pointed that level out to me, but nonetheless, beautiful little sell-off here, folks. Now look at the market starting to tick down. We just talked about this bearish pattern formation. Let's see if it's coming down and starting to break. There's going to be a lot of support right down here. Now again, I'm excited. Why? Because finally we're seeing a little bit of a pullback on an intraday basis instead of a float higher. First of all, the pullback started earlier. Remember the rallies we've seen of late, folks. Over the last few days, it's been a constant buy program all morning long. Finally, right around midday, we started to roll over today. Now we really want to see if there's follow through to the downside for the rest of the day. That's what we really want to find out. Once we come to key levels, though, you got to start looking for bounces. All right, we'll continue to update everyone that has the Research Center, which is our premium service with the most people in it out there will be updated tonight in the video, 30-minute long video on hardcore technicals. I'll alert you to all my positions, everything I have, what I don't have, what did I sell, what did I buy, etc. on this market. But nonetheless, a beautiful rollover right here with the market now ticking to the downside. In fact, it looks like we're basically on the flat line in this market, if not slightly negative now across the board. This is gap fill support, though. See this blue line? Very important blue line right here. We're right into it. And also, you're into the white line right here below it, which is gap filled. Dow now down 6 points. S&P is flat on the day. NASDAQ still up 15. NASDAQ is the stronger index today, as you can tell, as it still is up 15 points. Again, what I'm looking for here, there is major support right here, so I'm not sure if it'll break right now. Maybe it needs a little bit more of a bounce. If it breaks, then watch out below. You could easily go down all the way down to around 87 on the spiders, which would be another 50-cent drop if we take out this white line to the downside. So watch that on your downside. Continued good action to the downside in this market. You're seeing a lot of the short plays finally playing out after they squeezed the shorts like crazy. Now, there's some interesting things I can't go into in this video. That's for purely subscribers for our research center, but I can't wait to do the video tonight and talk a little bit about what levels. They all know it. I'm sure they're thinking it right now. What levels, yes, we gapped above. What levels have we pulled back below? I'll update everyone tonight on that. But look at the sell coming in. What type of pattern is this inside bars? That's a bearish pattern. You're now seeing it start to sell off, though it still has support right here at around 87.45 at this white trend line. This is gap fill on the spiders at 87.45, give or take. 87.40, in fact, would be official gap fill. So that's the level I'm watching. There should be some good support. It wouldn't shock me if you get a little more of a bounce off that level, but we'll continue to angle this and see where we go. On the bounces, if you get a strong bounce here, you're going to go back up and look for support at 87.90. After that, you're going to look for 88.30, 35, right in that level or wherever the 20 moving average is at that point. The pink trend line right here that was at 87.30, and the 20 moving average is now curving down. So a good little sell, but notice how it's now tagging that gap fill right here on the downside. That could be telling us a bounce is in the works, or at least a small bounce up before maybe a breakdown later. Keep an eye on this, folks. We'll have to analyze this as we go. Very important. Again, I do encourage you to come join the chat room, which is live intraday analysis. I give you all my entries, all my exits. My partner talks about the markets, give you all the technical analysis you can handle for any chart you have, any stock you have, while we constantly give spider analysis, market analysis, and Goldman Sachs, Apple, Exxon, you name it, we continue to analyze and give key levels to watch for. That's how we knew that the market would be a good short up here. This was a main level on the spiders, on the S&P, in fact, that was a main level. And again, that's for the premium subscribers, so please join up. Now let's go to the 60-minute chart here quickly. Notice this push. Here's what we had. We have obviously the tops right here. Very interesting yesterday. The key here is, folks, you want to watch to see, do we close below this pink line today or above? How does that handle? If we sell off, you're going to have support at the 20 here on the charts at around 87. And then if you break that, then the 50 moving average right here at 86, and then ultimately we'll have to look for other levels. There's also some trend lines here that I'm not going to go into. Those are, again, for the premium players that really want to know where the market could bounce and where it could go. But nonetheless, continued good selling in this market, folks, and you still want to watch. We're really piercing that white line right now to the downside. Looks very, very solid on this sell-off. Beautiful rollover today, again, led by ExxonMobil, and some of the financials have started to roll over very nicely. Goldman now down $1.40 on the day. Good rollover on Goldman Sachs. All right, folks, that's all for today. I do encourage you to join the webinar. In a week from Saturday, we have that next webinar date slotted for our methodology. How do we calculate a lot of this stuff out that we tell you guys about for the key levels? Also, join the Research Center. You get about five different services under that one Research Center for just $49.99 a month. In addition, the chat room is always a classic, folks. Huge group of traders in there. Can learn, so much learning to do. Always learning every day. Take care, and thank you.